Giles, how are you?
I'm good, Blake. Good to be here.
All right. Well, Giles, you're always a chipper guy and a great analyst as well. So you guys stick around. I want to say thanks to K-Man. Thanks, Ryan. If you guys don't listen to the Flow Show every day, if you're up in European hours, you should be trading with those guys every single day. Dale, thank you very much, and I'll pass you over to Giles.
All right, thank you, team. Thank you, K-Man, Ryan.
Cheers, mate.
Blake, and before you guys know, I have something to share. It's with the greatest pride that I'd like to announce today how humble I've become. All right. Anyway, now that we got that out of the way,
you got to stay humble so you don't fumble, buddy.
Yeah, call me Butterfingers, buddy. All right, so Giles Coughlin is back with us, and Giles always has, some great stuff to talk about. He's an excellent technician. What's the brokerage firm that you're with? Can you mention it?
Yeah, of course, Dale. I'm currently with HYCM, although I'm due to look for new adventures from the start of November. So this is my last month with them.
Okay. All right. Well, anyone would be fortunate to have you.
Oh, thank you very much, Dale.
Really. So Blake, hire Giles. Anyway, what are you looking at? We've had this tumble in metals. You're looking at Aussie, I see Australian commodity prices. Go ahead.
Oh, yeah. Let me just check. I just want to check that I'm sharing the right screen.
Yeah, it shows a lot of new events.
Yeah, that's great. Well, what I thought I'd do, Dale, is I really enjoyed the conversation as I was just waiting in the wings. And I thought I'd do a quick preview for the US JOLTS jobs and what I'm looking for. And then I thought I'd have a little comment on the implied volatility for the Japanese yen, just to add to the conversation. So I noticed that comment from Suzuki overnight about looking at volatility, whether he intervenes in the FX markets.
Yes.
And that for me just took away, a lot of analysts have been talking about 150 being the line in the sand. And I just can't see that happening now. And I've got on the charts the volatility for the Japanese yen, the 1 month implied volatility. And you can just see it's moving higher, but the volatility is still quite low if you compare it to, say, this time last year. So this time last year is around this area, around the sort of 12, 13s. And at the moment, we're about 9.2 in terms of applied volatility. So it's moving higher, but it's still relatively low. So that gives me some, confidence that the Bank of Japan, they're not looking hurried. And also in their summary of opinions out, a few days ago, they didn't seem to show any sign of major concern about intervention. And they were talking about January or March 2024 as the time they would know whether they're going to reach their 2% target.
Okay, are you supposed to be showing, or did you intend to show a volatility chart?
Yeah, I did, and it didn't work. Let me just do a new share. Okay. Here we go.
So let me ask you this. I'll take the other side of the coin. Could all of this also be about complacency?
Yeah, it could be for sure. And I think you can never underestimate the activity or the inactivity of a central bank. So you have to be extremely cautious with it. And I did notice that one of the respondents was using a call long in the dollar yen options, which is a very good way to deal with volatility. By using an option, you are limiting your downside from the very get-go. So yeah, I would be very nervous about being short the yen, Dale, for exactly the reasons that you mentioned. But for me, if you start to put all these different pieces together, you feel that the dollar yen would more likely to be 152, 155 than 149 and 147.
Okay.
But Dale, I take your point as well, is the Bank of Japan has their own opinions, and politically they are under pressure to strengthen the yen, aren't they? You know, it makes it difficult for their domestic market having such a weak yen, and a lot of importers are going to be feeling the pinch. So politically, there's pressure at home. At what point does that become too great? It's not an area I'm really up on, the internal domestic politics of importers in Japan, but I know it's an issue, but I don't know to what extent.
Okay, I appreciate it. Anything that could be an exogenous event that would perhaps risk off elsewhere on the globe,
Yeah.
where it used to be, considered a safe haven currency?
Yeah, so if there was a big slowdown in US economic data, obviously that would be the big driver of yen strength. And of course, that's what the Bank of Japan are hoping for, isn't it? They're sort of hoping for that turnaround. And looking at leading economic indicators for the US, they are pointing towards a recession for 2024. But the coincident economic indicators are saying that all's okay right now. So, at what point, or does the coincident economic index drop, or does it just keep pushing higher? And that's what analysts are trying to understand, and everyone's got their own view, but I can't see a clear answer to that question.
Maybe we get some new information on the NFP, Giles. What do you think?
Yeah.
Aren't we due for some cooling in that report?
Yeah, I mean, the jobs market is shorthand for inflation, isn't it, for the Fed?
Yeah.
If they see jobs cooling, then that's deflationary, because, as we know, employees are less able to demand higher wages, so that should cool prices throughout the economy. And in that sort of, that leads nicely to this JOLTS job report that's coming up. So what I'd be looking for here today, you can see that the job openings, they're due to be at 8.8 million. So first of all, they are down from the prior of 8.8, and we are seeing job openings sort of moving lower generally. And the way analysts look at this is they think if there's less jobs available, it's the beginnings of a sign of a weaker jobs market, because less people are advertising for jobs. So it does give a good indication of the labor market. And for me, when if you just look at yields, it's just been on that march higher, hasn't it? Since the dot plot was higher for longer narrative from Powell on 20th of September, we've just seen yields move up and up and up. All those summer bond buyers caught out, and there was a lot of them. So a lot of people are underwater with those bond positions they bought, and the dollar index pushing higher and higher. So with that, you've got to ask yourself, well, I ask myself, what would be the surprise print here? Will it be a surprise if the jobs market is strong? No, because the jobs market being strong is really what gave Powell confidence to have the higher for longer narrative, because he said, didn't he, on September the 20th, with the GDP projected to be at 2.1%, rather than the 1% that was projected prior, that we feel the US economy can take these hikes. So if we saw this job openings come in below 8.5 million, and we saw jobs quits coming in higher, if we saw that anything below 8.5, 8.4, then you'd expect a little bit of the very recent dollar strength to pull back, and a little bit of the dollar yield to pull back as well. So that would be dollar yen downside and a nice pop higher in gold probably. So if I got this coming in 8.4 million, what I would look for, given how extended gold is at the moment, and that's really been one of the main instruments that's been punished by the higher yield and higher dollar story, has been gold. You can see, volatility picking up here nicely over those last few days. You can just see visually, that's pretty, that's like a flush. That's a pretty strong flush, isn't it? Down to that next major weekly support level. So that would be very vulnerable to a retracement. And a weaker jobs market, I would easily expect gold to push back up towards that 1850 1860 region. That would be a good target for intraday gold longs. If I saw, it would be contingent on the data. It would have to be a jobs openings coming in below 8.5 million. So that's what I'm sort of looking at for today in a pretty data light calendar day, really.
Okay. And anything happening? You have a view on the Aussie approaching recent lows? Any hope for some type of low in the Aussie coming up here?
Yeah, I am seeing that. You look at the CFTC report for the Aussie, and what you can see is on a 12-month basis, the Australian dollar is well below its average mean. Its Z-score is 2.65, which basically translates to being very, very heavily sold. And when you look at the CFTC report, we see that Australian dollar shorts are in an extreme position. So what that tells me, Dale, is that the Australian dollar is extremely vulnerable now to any good news. And the obvious proxy for the Australian dollar, for the Chinese yuan, is the Australian dollar. So the most likely bump for the Australian dollar would come from a recovery in China.
Okay.
So I've been
that's
analysts.
kind of not what copper is saying here today.
Yeah, now copper had a real big flush lower today, and that's what weighed on the Australian dollar today. You can see, copper's had that big flush into that support level.
Oh, now it's reversing.
yeah. Well, it's just finding a little bit of support. I couldn't see any particular reason. I think when the Chinese market opened up again, it sort of had a little bit of a reaction to the recent sort of sell bias we had over the weekend. Had a big flush and sort of got it out the system. I couldn't see an obvious catalyst for that. And I know Evergrande jumped off its lows and sort of made a bit of a recovery, which is that property group in China. And a lot of analysts talk about the property crisis in China. So
Dr. Copper needs a psychiatrist.
Dr. Copper,
because I think he's bipolar.
Yeah, exactly.
All right. Anyway, that's my diagnosis.
And if you see, I've got an overlay of the China 50 chart here, so you can see how closely copper prices are linked to China's equity prices. So, and obviously with China being the biggest consumer of copper, you know, if things are going well for China, things are going well for copper. So you could as equally put the Australian dollar index on this as well. And that will give you a good indication. So if China recovers, and I was reading some analysts from Goldman Sachs that were saying that economic activity is starting to pick up. You know, they did a whole sort of paper on it, and they were sort of making more positive noises towards, you know, various economic activity indicators that they were referring to. So Aussie, you know, if someone put a gun to my head and said, you have to look for one currency to retrace, it would be Aussie dollar #1 and the US dollar #2. But it's the timing with the US dollar, because that's also stretched to the long side as well.
Yeah. Okay. So any view on risk? The bulls are saying this was a healthy pause to refresh, and you know, kind of just like an ABC 3-wave pattern into support, and that we're going to put in a low here and blow off to take off into the end of the year. You have a view on that?
I've been thinking about this, Dale, and I find it extremely difficult to know whether this is going to be a near-term bottom for stocks or not. Now, I'll tell you my dilemma is when I look at it on the weekly chart, say the NASDAQ, you've got a near-term trend line broken. So technically that's favoring near-term sellers. I've got to see that level hold for bears to continue that move lower. And at the moment they are closing below it. When I look above, I see all-time highs at 16,500. And I think to myself, could I really see a market where we take out those all-time highs, fueled by low interest rates, fueled by government spending, fueled by so much fiscal support? Could I see those all-time highs being taken out? I couldn't. Could I see price maybe retesting them and dropping lower? Yes. So that's what I see fundamentally and technically. Then I look at the seasonals, and you see this such a compelling seasonal strength for the NASDAQ. If you just take, this is just representative, but if you look at all US stocks, and if you look at them, over the last sort of 25 years, from now until the end of the year, all US major indices have a strong bias to the upside.
What's that date? The low of that?
Now that's interesting. 8th of October.
Okay.
Right. So that gets us around NFP, right? So it gets us one last NFP flush.
Yeah. All right.
Yeah. So also if you look at it interesting as well, I was looking at the NASDAQ around, and the reason I was looking at NASDAQ is just because I was short NASDAQ. If you look at the first day of Q4, look what you notice. So this is around the first day of the fourth quarter in the NASDAQ. You see a bias for upside.
Yeah.
Okay. Yeah. And that's the same with the Dow. It's the same with the S&P 500. I haven't got time to go through them all. But then if you notice afterwards, you get the drop off.
Yeah.
Right. So you get the turn of the month effect, where you tend to see a major indices gain from about the 26th to about the 5th. And the logic behind that is that a lot of people get paid around the end of the month, and a lot of their payments to pensions, et cetera, get made at that time. And so there's this artificial inflow sort of stream that happens around the same time each month, and that just sort of bumps stocks up around the turn of the month. But just notice, once you've got around that influx, you tend to see prices move lower. So if you look at the Dow, you'll see exactly the same pattern, right? From the first day of Q4, look how it sort of falls from that first day of the month. S&P 500, you get exactly the same kind of effect. A little pop higher and then a drop lower out of the event. So if someone put a gun to my head, what would you think? I'd think, the analyst side of my head says it's all going to depend on the US data this week. And if that starts coming in weaker, then there's no reason why stocks can't continue falling. But if it comes in strong and the US economy holds up well, then there's no reason why equities can't have a bounce either.
Okay, so if that comes in weak, that's interesting, because that'll mean yields will come in, right, Giles?
Yeah.
And people are like Pavlov's dogs, are trained lower yields is risk on.
Yeah.
So do you think that could really be the hook, that people see yields starting to fall and the market not rallying with it?
Yeah. That would be really, really interesting.
Because we haven't seen that.
Yeah.
We haven't really seen yields fall. The
Yeah.
market's gone up with higher yields.
Yeah. See, I tell you, it's interesting what you said. I'm getting, normally, as you're right there, I trade quite a lot of risk events. And normally, if you got something that's going to bring the yield down in the current environment, you think, oh yeah, definitely want to buy equities. But I find myself holding back, and I'm wanting to stick to something that's dollar denominated, because I have much more confidence in the dollar's reaction to bad economic data than I do to equity markets. So that's just kind of an intuitive thing. I thought I'd rather trade like gold, which is really like a real yield and a dollar play. I just feel more confident with that than how's the market going to react.
Yeah. Okay. Well taken. Giles, anything you want to talk about to wrap it up? I think that you really present both the technicals and fundamentals, the way you marry them up. is elite, and really always learn from you every time you're here.
Oh, it's likewise, Dale. I learned a tremendous amount from yourself, and I love the questions that you ask, Dale, because they really help me to think. And I think there's so much value in this kind of environment. I get a tremendous amount from it as well. So thank you for inviting me.
Okay, well, I'd like to, we'll catch up in the winter, and
Great, Dale.
I know that everyone, the whole team, we all, like you, respect you, and hope for the best for you, rooting for you, that whatever you decide to do, that it, gives you prosperity and happiness.
Oh, that's a lovely sentiment. Thank you so much. I'll take that with me into my afternoon, and it'll cheer me along the way. And the same to you, Dale. And I love watching you guys and seeing your tweets. And I'm always thinking, giving a little cheer for you as well as you're going along your way. And you've done a tremendous job here with ForexAnalytix, and you host it so well. It's such a pleasure to be part of.
Well, Giles Coughlin, everyone that follow Giles, so you know where he's going and what he's doing, because he's a pro, and really appreciate every time Giles comes here. So thank you again, buddy. It was great seeing you. Let's not let 6 months fly by again.
No, absolutely, we won't.
All right.
Thank you very much, Dale. Be in touch and look forward to seeing you again in the future.
All right, Giles Coughlin, everyone, at Giles Coughlin CCC on his Twitter handle. Follow him. You could join the team in about 22 minutes for the morning edge. Thank you, everyone.
Thanks, everyone. Now take care, guys. Bye.
See you, Giles. Hope that we added value to what you're trying to accomplish. It's not an easy endeavor. And above all, don't just count your pips, count your blessings. Good luck on Turnaround Tuesday. We'll see you tomorrow. Giles Coughlin, everyone. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.